Hello and welcome to BQ Prime. You're watching Earnings with BQ, and my guest today is Mr. Ramesh Swaminathan, ED and Global CFO at Lupin. And joining me as well is Monal, who is my colleague. Ramesh, morning. And we saw your numbers, the top line growing by nearly 4%. There's a good expansion in EBITDA margins. What is the kind of headroom that you have with respect to the EBITDA margins? You had spoken to us earlier about how margins would expand going forward, but if you can give us runway for that margin expected in FY24.
Yeah, so let's begin with the top line. The top line, particularly in America, has been, has moved considerably. If you recall, the first quarter was about 125, 127 million dollars. The second quarter saw us getting about 157. It's now moved to 177, 178. This is after taking into account quite a lot of price erosion, which happened if you were to compare this with, in fact, the results of Q3 of last year. Last year was 201. We also brought in a number of new products in the course of this year. Four of those came in the third quarter itself. So that's one part of the story. Second is essentially on the, if you look at the gross margins, they have gone up because there has been tremendous focus, as I was talking about, in terms of bringing in the products, as well as working on alternate vendor development and routes to synthesis and the like. On the expenses front, there are two parts to this. We've been working on actually a lot of inefficiencies that we had seen in the past in terms of failure to supply, in terms of air freighting, in terms of supply chain issues and the like. All of this actually which impacted the bottom line. We also went in for a workforce planning at the factory level and R&D level. And all of those have actually paid in rich dividends. But having said that, there is more work to be done on that score. If we talk about this particular quarter, there is seemingly an increase in expenses, which is actually a little misleading because about 40 crores of this is really one-time expense, which we had to incur on some part. And it is essentially on compensation for a business deal that we did. And the second part is essentially increase in terms of travel expenses, SG&A expenses on promotions and the like. And that is essentially for a good business performance for the future as well. So there is, of course, investments coming in that sense. But at the same time, we have not lost sight of the fact that we had a goal of close to about rupees 600 crores in terms of cost reduction optimization. And the march is still on in that regard.
Where are we on that cost reduction as of now?
So there are several buckets that we were kind of addressing. Some of those have actually, have been addressed, and we are reaping the dividends on that, and which will potentially go up in the days to come, in the quarters to come. But there are certain parts which actually, for reasons beyond our control, those relating to actually business volumes dropping in America in some parts. The OSD business in a general sense is facing a lot of headwinds out there, and because of that, we had to drop a few products. We also had some issues in terms of impurities, nitrosamines that we saw on a few products, which caused us to kind of drop those products or actually take it off our portfolio unless we address those. And there were write-offs on account of those and so on. So those have actually, in some ways, derailed our optimization, our cost optimization program. But those, I think, would also be addressed in the medium term. So from my perspective, whilst there are several reasons to be happy about the global optimization effort, there are, of course, pockets that I know need to be addressed, and that's for good reasons could not be addressed in the medium term.
So in the medium term, if you look at the margin picture, as you bring in the cost optimization or the entire targeted senior cost reductions of roughly 600 odd crores, which you mentioned, where is the margin going to land up?
Our first port of call would potentially be to get to at least 18 to 20%. And I think by the end of this fiscal, we should be closer to that figure, closer to at least 17, 18%. And this would potentially be aided by, in fact, a movement on the top line in terms of the kind of products that you bring to market, including Spiriva. So we are counting on all of those to actually move the top line. Apart from that, of course, the expenses front we'll continue to work on that. So we would see results at the end of this by the end of this fiscal, and potentially starting from the next fiscal, we think we would find a normalized level as in line with the competition.
Monal?
Just a quick update on Spiriva. Have we received the approval or are we still awaiting?
Yeah, so we are very confident about our chances there. Our talks have been going on very well. There is a TAD date, and we are we remain optimistic about our ability to kind of launch it in the first half of the current fiscal.
Okay.
Uh,
So originally it was expected in Q4, right? So how's that going?
There has been some delay on that. So we'd asked for a early date with them, and so that's early thing is settled, and we believe that we should be in a position to get the approval anytime.
Okay. Ramesh, you mentioned the fact that, US businesses, $177 million is what you mentioned, right? How it's gradually came back after the price erosion. And compared to last year, it was around $200 million. When do you see US business revenues crossing $200 million? I mean, is there a timeline for that? Are you dependent on new launches for that? How is it going? And can you give me a climate assessment of how the price erosion environment currently is? Has it settled down, or it's still continuing the way it is?
In a general sense, I think the generic industry, when it comes to, in fact, the oral solid dosage business, is actually facing a lot of headwinds there, and that actually is showing across various companies. So in our case also, it is that part of the business which actually has eroded quite a bit. So there is price erosion, out there. But the silver lining is that we are also pivoting to more complex products, which includes the injectables part as well as the inhalations, and that I think is going to be a fairly large chunk of our overall portfolio in the quarters to come. That's when we think the real movement would happen once we get the products into the market, because there's a fair degree of stickiness when it comes to pricing out there, and the intensity of competition is also going to be not that severe. So that is possibly in the quarters to come, whilst the OSD portfolio would potentially continue to erode. I would think that the normalized level of turnover for America for the quarters to come is between 170 to is in the 170 range until we bring the products that we are speaking about to the market. And once it comes, so in the next 3 to 5 years, I would imagine that the injectables portfolio would contribute between $300 to $500 million, and equally, the inhalation space as well. So that's really going to move the needle insofar as we are concerned.
So the margin guidance that you spoke of, does it include our launch pipeline of Brovana, Zoponex, and Darunavir?
Brovana has already been launched, so when I speak about, Zoponex is something that we took over. It was an acquisition in the course of this year. So those have actually been included. Products to come, of course, there is Spiriva, there's Darunavir, and a few other products in the OST as well, which are fairly good products, which will move the needle.
So it includes the assumption that there will be revenue flows from all of these products, yes?
Yes, and very much so on the inhalations front and injectables, because the array of products that you're kind of working on would be, would really get us the kind of targets that we set for ourselves.
So just a quick update on the facilities that are under inspection. There's Mandideep, there's Nagpur facility, Pune, and Somerset. So is that going to delay any approval process? Is that the reason why Spiriva approval has been delayed? Are we seeing any other deference in terms of launch timelines, or is it going to affect our revenues?
Somerset and Goa really, been cleared. So we are now speaking about Mandideep, Pithampur, and potentially and Tarapur. So Pithampur inspection has not happened as yet. With or without the inspection, we do think that the Spiriva would certainly happen. We remain confident about our prospects for the first half of the current year. And so far as the resolution is concerned for all three plants, we're working on those, especially Mandideep and Tarapur, and remain confident that we'll be able to address it and come out of it in the near future. Pithampur has not been inspected as yet, but we don't expect too much of surprises out there, and remain confident about its prospects.
Ramesh, finally, your 9-month numbers on a top line, you're marginally lower on a year-to-year basis. Do you expect to end the year on a positive growth rate?
Yes, we do remain confident on that. As I was saying, the first quarter was really an aberration when it comes to America, and since then things have actually settled down. There was price erosion, and that is evident. The first quarter, as I was telling you in Q3, if you compare the current performance vis-a-vis the previous year, India has been kind of impacted a bit because of loss of exclusivity on a couple of products which are very important to us. We also have the impact of ever increasing NLEM in India. In some ways, it has actually impacted this quarter as well as potentially will impact the next quarter as well. But that's again for the entire industry. But if you look at, in fact, other geographies, we're doing fairly well. There's secular growth across various markets. The cephalosporins portfolio that our API SBU was churning out, it's back in the reckoning because the acute therapy, the flu season has kind of picked up in every part. So we do think that this year we will end up for sure on a positive note vis-a-vis the last year. And once we have products launched in America and that really resets the bar, we would see growth in America and other parts also.
Ramesh, it's been a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
My pleasure as ever. Thank you.